Hello guys and welcome back. This is the Complete Trader, and this is a trade that I took on Crash and the Boom Index. For some time now I've not posted on, I've not talked about Crash and Boom, and some people have been sending me messages like, "Boy, don't you no longer trade Boom and Crash? You no longer got spikes." Some of you were attracted to this channel because of the spike videos that you saw. You see, the strategy remains the same. Okay, it doesn't matter the instrument you're trading. It could be the currencies. You could trade anything. The strategy is still the same. So here's a video about a trade that I took a few hours ago. Okay, and I'm not just here to show you the results, like everything is blue and stuff like that. Yeah, boom and crash. I bought. I'm trading in the direction of the spike, but in crash and boom, I mean in crash 500 and in crash 1000, I'm trading against the spikes. Okay, so um, I'm not just here to show you the testimonials or the result of the trade, as it were, but I want to use this opportunity as well to remind you about a few things and add a little bit of tips. Okay, I'll give you a little bit of tips that will kind of improve your trading. Okay, so I'll walk you through the charts and we see what we can find. Okay, so let's start with the crash 500. Okay, so the crash 500, here we saw price is in a key level. All right, so before I do anything, guys, like I always tell you, you need a reference point. Okay, you need a key reference point. Now, what's your reference point? Your reference point has to be a higher time frame key level. Okay, so first of all, you've determined the trend on a higher time frame. Or if you don't determine the trend, if you don't have, you're not trading in line with the trend, you could have a very good reason to trade against the trend. Okay, but any which ways, let's go to the daily chart and let me see a few things here. Okay, so price is in an upward trend here on the daily time frame, and we came to an area of key level. Okay, and I want to show you something. This is something that I taught here on this channel. Okay, I think that will be seen on 15-minute chart. Okay, now you see the shaded area. That's the key level that I marked out on the daily time frame. Okay, now you can see here we had a divergence. As we enter that level, you see price rushed into the level. This is something I teach my students in my training, that when we see price rush into a key level like this, I expect to see some dirty work, from the liquidity providers or the market makers going forward. Again, this is something I teach, my students, because it makes a lot of sense that if they're going to be buying at a level, then they have to, create liquidity around that level. If you remember the video I posted, where I talked about the forex master pattern. Okay, and then I also talked about, I think I mentioned something like that in the video about conflict of interest. Okay, so but it makes a lot of sense that if they're going to be buying at a level, they need to create the sell side liquidity that is needed for them to go long. Okay, now these are things that I teach in detail in my training course. So but as price dropped into the level, some people would have taken the trade here and definitely you could have made some money, but we see price drop even lower. Okay, now at this point we had a divergence. Okay, and this is what we have here, the MACD. This is what I've thought about in one of those videos. I think I'll drop the description here. If you're new to the channel, you'll find the link to the video about divergence. So any which ways, in this key level, you see we're not just taking a divergence on any area. This is on a key level. Okay, now after the divergence, we now see a break of structure here. Price broke structure. This is the last high, okay, that broke a low. Okay, this is the high of the last swing, or the swing that broke a low. Now when that high is broken up to the upside, that is a trend reversal when we talk about market structure. Okay, and so that's it about that trade. This level here is a key level, and this is not a key level, rather it's a reaction point that I teach on my training course. And this is why I move my stop loss above, but it's below. The stop loss is above my entry, but it's below that key level point. But you saw that when we got into the key level, this was a good time for me to be expecting to see this divergence, and we got it. And after we saw the break in market structure, it was now okay for me to take the trade. All right, now let's go to even more. So this was the crash 500. Let's look at the boom, or let's look at the crash. Okay, let's look at the crash 1000. Okay, so yeah, we have the crash 1000, similar stuff happening. We marked our key level on the higher time frame. So daily chart. Now this is what I was talking about, that you may not be trading in line with the trend, but you have a very good reason to be trading against the trend. Okay, but that has to do with your understanding about, certain things in the marketplace. And here we see that the market is obviously in a downtrend on this daily chart. But why am I trading to the upside? Why am I buying at this point? We saw this low right here. Okay, and the market trades through that low, and we see a sharp rejection to the upside. Now, this is one of those things that I teach as a fake break or a fake out. And a fake out happens for a reason in the marketplace. Now, there are times this happens and the trend will continue, but a lot of times when you see this happen, they at least we will trace back into structure to pick up more orders. Okay, it's things that I teach again in my training course. So this is why I picked this level as a reaction point or a key level, okay, at this area here. So those of my students who took my training course, we understand why I'm taking that as a key level. So in one of my videos coming, I will teach you guys about key levels, but obviously it's not going to be things that I teach in my training course, but I'll give you ideas on how to, come up with key levels where you can trade around. Do you understand? So let's go down to lower time frame, and we'll see, let's view, see more things in that structure. So here we see we have the market trade into our level. I think let's go to the 5-minute chart. All right, so right on this 5-minute chart, you can see market dropped into the key level, okay, into that key level, and we see an automatic rally. We see a strong rally happen. The market comes back into the key level, and then you see a divergence. Okay, so market was making somewhat of an equal low here, but here we're making higher low. This is a bullish divergence right inside my key level. Okay, so what I'm waiting for next is to see a break in market structure, which I have here. Okay, the market retraces back into what? Into this area to pick up orders below a liquidity pool. These are things that I teach again in my training course, and this is a very good level for me to take my trade, even though I missed this entry. Okay, I missed this entry, but it's a very, very, very good level for me to take my trade and expect an expansion to the upside. But any which ways, we're still in profit in that one, and we've moved our stop loss above the entry, and so running on a risk-free trade. And that's it for this one. So we saw the key level. You have to start with your reference point all the time. So we have the key level. That's this zone, this gray, this area that is marked out. And we saw the move up, and then we had this divergence, okay, showing us that momentum is kind of shifting back to the upside. And we had the break in market structure to give us that confirmation that the price is kind of reversing. And then we have this little retracement back into a level to pick up an order. Now this could have, you could build a trade around anything, guys, but this is what I teach my students. This is an area where they are picking up orders. Okay, and then we saw the expansion to the upside. You've caught something out of this, even though you're trading against the trend. All right, so let's go to the last one. That is the boom 500. Now this is what a lot of people love, catching the spikes. So yeah, this is the spikes. Again, there's a key level right there. Let's go to the daily chart, and we're gonna see what we build our ideas around. So we have market dropping, obviously. So this is a downtrending market. All right, and then the market, reversed up a little bit. So right here we saw a retracement into something. This is one of the things that I teach my students as a key level. And so we go to the lower time frame to spot to monitor price action as we drop into the key level. So as we come into that area, that key level, we begin to see some level of divergence. I think on the 5 minute chart is even more clearer. So we saw market, like creating this higher highs and higher low, I mean lower low, lower highs as it drops deep into our key level, and we had a divergence there. Okay, you can see the MACD was creating higher lows rather. The MACD was creating higher lows while price was making lower lows. Okay, so that's a bullish divergence, and it means a lot to us when that is happening right inside our key level. Okay, now the next thing we had was a breaking market structure here, and then price retraces back down here to pick up our orders for longs. Okay, then the market rises up. You understand? So this level here is one of those things that I teach my students as key or as a reaction point, and this is why I have my stop loss below there. So we've not moved stop loss above entry on this one. Okay, just wanted to show you guys this very quick, and I hope you get something from it. Okay, so we don't use divergence just anywhere. Okay, we wait for it to enter our key level. That gives us a high probability of using the divergence. Now when you use the divergence, you want to make sure you're supporting that with market structure. Okay, you want the market to show you its hand. Now market, you wait for the breaking market structure, and then that should give you more confidence to take your trade. Okay, now you need to understand the areas where you should be coming in. All right, so this is the process again. We build the sentiment on the higher time frame. In other words, we're finding where the market is most likely going from here. Okay, and then after that point, you have marked out your key level, and we expect price to retrace into the level. Once it retraces into that level, we want to see things or actions in price action that will kind of confirm to us that price is now reversing in the direction of our prediction. Okay, and once we have that, we are now we are confident to take our trades. Okay, so that's it about this one, guys. It's not long, it's just a short video and short and sweet. Okay, I hope you gain a lot from this. Well, you can click the like button for me and share the video to your friends. Talk about the channel, it's great. Okay, and if you want to chat me up, you want to talk to me, my Instagram link is always included in the description area. Okay, so subscribe if you've not yet subscribed. More videos gonna come, more deep things. In my subsequent videos I will be teaching or giving you ideas of key levels where you'll be expecting to see some reaction of price from. Key levels are areas where we expect to see notable price movement from. You understand? But that's what it is, guys. This is the boom 500, and you see the spikes. Can you let me bring you to the 1 minute chart? Okay, we're seeing this is a retracement to the downside. Could be taking some out. Maybe when I close this when I'm done with the video, I'll close some trades. But then we have this. Look at the spikes. Okay, huge movement in price. All right, so that does it for this one. All right, God bless you. Until I come your way next time, guys, stay profitable. Okay, cheers and God bless you all.